Genting Malaysia is said to have told attendees at its pre-opening preview that its outdoor theme park is finally scheduled to open its doors to the public in February, in time for the peak season during Chinese New Year, which starts next Tuesday. Public Investment Bank analyst Eltricia Fong, who attended the sneak peek, said the wait is almost over. She said the opening of the estimated $800 million or about 3.2 billion ringgit Genting Skyworlds should mark a gradual return to normalcy and expects the casino and hotel operator to turn profitable this year after 2 years of setbacks. While earnings aren't expected to revert to pre-pandemic levels in FY22, she believes there are limited earnings risks, as a full lockdown is not likely to be reintroduced, considering the high vaccination rates achieved. As international borders are likely to remain shut in the near term, she said Resorts World Genting will be focusing on the local market in driving visitorship, perhaps in the next 6 months. Visitor arrivals should increase to 23 million in FY22 and 27 million people in FY23, from a low of 12.7 million in FY20. Prior to the pandemic, visitor arrivals hit 29 million people in FY19. Public Investment Bank upgraded Genting Malaysia shares to outperform, with an unchanged target price of RM3.25. At the close, Genting Malaysia's share price settled up 0.7% at RM2.75 for a market value of 15.5 billion ringgit. Fugitive businessman Low Taek Jho, or Jho Low, has asserted that the global comprehensive resolution between him and the US Department of Justice, or DOJ, that was reached in 2019 absolved him of any claims of wrongdoing in the 1MDB saga. In his statement of defense in the lawsuit filed by 1MDB and 4 of its subsidiary companies to recoup $3.78 billion or about 15.85 billion ringgit from the Penangite, Low said the deal he entered with the DOJ did not constitute an admission of guilt, fault, liability and/or any form of wrongdoing. In the document cited by theedgemarkets.com, he also expressly denied any wrongdoing, adding that he is not and has never been a director or shareholder of 1MDB, a member of 1MDB's board of advisors or a part of its management, and as such has no legal standing to exercise control over these entities. As such, he denied having caused the alleged transfer of the $3.78 billion from 1MDB to other various parties. Additionally, he said the claims amount to an impermissible double counting, since the DOJ had already returned billions of ringgit in 1MDB assets to Malaysia, so the monies being sought should not be considered as forfeitable sums. On October 30th, 2019, the US DoJ announced it had reached a settlement to recover more than $700 million worth of assets acquired by Jho Low and his family using funds allegedly misappropriated from 1MDB. However, it also stressed that the agreement did not release any entity or individual from filed or potential criminal charges. Bursa Malaysia posted a 38% decline in its fourth quarter FY21 net profit to 65 million ringgit, amid lower contribution from its securities market segment. Revenue was down by 28% to 165.2 million ringgit. The group declared a final dividend of 17 cents per share. For FY21, earnings totaled 355.25 million ringgit, down 6% year-on-year, while full-year top line shrank by 4% to 767.5 million ringgit. Bursa Malaysia Chairman Tan Sri Abdul Wahid Omar said the exchange had demonstrated great resilience and performed well in 2021 despite the difficult year. He said the Bursa operator continued to witness active trading for securities at an average daily trading value of 3.5 billion ringgit. In addition, it recorded 30 IPOs in FY21 compared to only 19 in FY20, which raised a total of 2.7 billion ringgit. These numbers, he said, are testament that companies and investors are confident in the Malaysian capital market and the exchange as a platform for their fundraising and investing needs. Meanwhile, Bursa Malaysia CEO Datuk Muhammad Umar Swift said the securities market continues to show long-term growth. He added that the exchange is exploring new products for the derivatives market while revamping existing ones. Bursa Malaysia rose 0.3% to RM6.18 at today's close for a market capitalisation of about RM5.01 billion. AFFIN Bank subsidiary AFFIN Huang Investment Bank and selected key management shareholders of AFFIN Huang Asset Management have inked a deal to sell their entire 68.35% stake in the asset management company for a cash consideration of RM1.54 billion. A conditional share purchase agreement was inked with Starlight Asset, an investment holding company incorporated by funds managed by CVC Capital Partners. According to a statement by AFFIN Bank, the sale values the asset management company at RM2.25 billion. It said the group will recognise profit from divestment of RM1.07 billion for the sale, which enables it to realise a premium based on the consideration, which represents a historical price to asset under management of 3.1% and price to earnings multiple of 19.7 times based on AFFIN Huang Asset Management's FY20 audited financial statements. It also expects the deal to enhance its common equity Tier 1 ratio by 289 basis points and said it will use the gains for working capital requirements to expand its core banking business. The deal is expected to be completed in the third quarter of 2022. The announcement confirms a report by The Edge yesterday. AFFIN Bank's shares ended trading down 8.7% to RM1.79, giving it a market capitalisation of RM3.8 billion. SIME DARBY Plantation says the US Customs and Border Protection has determined that certain palm oil products of the company are produced using convict, forced or indentured labour. The notice of finding takes effect today and will see SIME DARBY Plantation's palm oil products seized by port directors and forfeiture proceedings commenced against its products. In a statement filed with Bursa Malaysia, its Group MD Muhammad Helmi Othman Bashar said SIME DARBY Plantation has been cooperating fully with the agency ever since it was issued a withhold release order on December 16, 2020. In response to the allegations, he said it had appointed an independent ethical trade consultancy to undertake a full-scale independent assessment spanning its facilities across Malaysia. This work, he said, was delayed by government-mandated COVID-19 restrictions, but is now close to completion. The finding by the US Customs is therefore hugely disappointing, coming just ahead of the publication of the independent report. He added that through the in-depth on-site work done by the independent consultant, the group is confident the report will demonstrate that the company has internal controls and systems in place to support its workers and ensure their well-being. He said the group looks forward to cooperating with the US authorities and to demonstrating its full compliance with the country's import regulations. Prior to the suspension of trade of SIME DARBY's shares from noon today, its share price was up 0.79% at RM3.83, valuing the group at about RM26.5 billion. Trading in its shares will resume next Monday morning.